Hey everybody, Dan Rawich here, University of Options Daily Trade Update. We had another very good day. Let's see here. So I had 5 wins, no losses. You can see the trades and the time of day right here. I made $41 per contract. Lee also had 5 wins, no losses, and I think he ended up very close to me, but I forgot. Oh no, I do. I have it totaled here. I think I actually beat him, unless there's a trade I don't know about, because I haven't beat him in a long time. He went 5-0, $37 a contract. And just as a reminder, if you trade 40 contracts and did what I did today, you'd make 1,600. If you trade 80 contracts, you'd make 3,200. And even if you traded a measly 5 contracts, you'd make $200. That's 50,000 a year, and it takes almost no capital. So not bad. Super excited. We just keep winning. The system just working great. So let's go through the trades real quick. And the first one here was at 740. And you can see that everything starts with a bull signal. So here's our bull signal. And then remember, it has to be confirmed. So it either has to cross these dots, and if there's no dots, which there are no dots, then we just need to clear this wick. We cleared the wicks on this candle, but the chop index didn't drop yet. And the next candle, the chop index dropped. I went in, great timing, good trade, exited here, pretty close to the top actually. A little bit of luck, but also you could kind of tell the price was getting fatigued. And remember, our style is we take 4 to 6, sometimes 7 trades a day, and we just scalp. 5, 10, $12 per contract. And it really adds up and it really minimizes our market exposure. So in this case, I was in it for 740 to 745, 5 minutes, kind of a long time for us. Okay, next trade, got the bull signal, needed to validate, and you need to clear this dot right there. So we cleared that dot, and we actually cleared it way back here. But the chop index hadn't dropped enough to make me thrilled. This one was okay. I can't remember exactly why I waited, but sometimes I just want a little more comfort. And what gave me that comfort is when the chop index really fell down to this level. So actually I got in on this candle right here. So got in at 806 and got out at 810. And then we went right back in again because so you see how it kind of tired out here. So I exited the trade because it was getting kind of fatigued. And you can tell that it wasn't making new highs. 1, 2, 3, 4. 4 tries, no new high. Get out, take your money. Then the next candle, it actually broke above that level and the chop dropped again. So why not? Let's go back in. We did, it worked. Next, well, that's the same one. This one we got in here and got out at the top. Pretty good timing. Then the next one came in at 912 and the bull signal happened way down here. I did wait probably longer than I needed to. There was some kind of funky stuff going on. But so for me, the dot, there's no dots. Oh, there are dots. Sorry. We need to clear this dot right here. So I really could have gone in here and the chop index did drop. I can't remember exactly why I waited, but you can see I waited for a really big drop in the chop. So we don't mind missing the first third or half of a trade, and we don't mind missing the last third. It's that middle. That's the meat of the trade. That's where all the momentum is, and that's why we're able to get in 912, get out 916. 4 minutes, not bad. All right, and then I think there's just one more. Yeah, this one was short. So we got the bear signal way up here, but you see where the dots are? Way down there. So we need that confirmation. These dots filter out almost every false signal because you can see flight station catches the bottom, gets you out at the top. If you're going short, get you in at the top, out at the bottom, over and over and over. But sometimes it gives you false signals when the market's sideways. And these dots, you just don't get tricked. So that's kind of cool. So anyway, we cleared here. The chop dropped a ton. And so in I went and I was in and out on the same candle. So pretty good day all in all. All right, so that's that. Let's talk about the market update real quick. It's really dicey right now. Like this thing could really crater, really crater. But there are a few little signs that are saying that maybe it's going to get better. Sign number one, look at all the calls. They're starting to come in. This was all red the last several days. The dark pools are another fascination. 411 and 414.60. The 411s just started pouring in at the open. So check this out. I'll go back here and 411, I think it's down here. So this was that dark pool area I just showed you. $3 billion. $3 billion. Um, and you can see the market opened right here on that dark pool level and just skyrocketed. No real surprise. Then remember the other dark pool I just showed you, 418, actually 418.60, because I moved this just now. Let's just remind you here. So billions of dollars in the afternoon started pouring in at 414.60. So no surprise, price gets right up there and man, did it fail, and it fell hard. Then it came up and tried again. Bang, 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 couldn't get above it. And then it kind of snuck above it for a minute, tested it again, bounced, tried to go back down to, it's like a magnet. It kept getting pulled back to that price. And then ultimately, we closed right on the number. So if anybody tells you dark pools are not useful, they're wrong. Okay, next we have the the dealer hedging stuff. So to begin with, notice how the option flow was green kind of earlier on in the day. We haven't seen green in a long time. I gotta move my face, sorry. But we saw green. And then once we failed at that dark pool out level, bam, the options flow just went red and things got very unpleasant. You can see that. As soon as things went red, boom, price started coming down. Okay, the next thing I want to show you is, why is that happening? Sorry, guys. Wow. Okay. A lot of red here, a lot of puts. Now, this is ugly. We keep talking about this is dealer hedging. They're hedging green because their clients are red and they cannot take market risk. If they sell a call, they have to buy the stock. So that's what you're seeing here. They take zero risk. These market makers make their money on the spread between the bid and the ask. Okay, so that's ugly. But then all of a sudden, look, the GEX, this is the deal, this is the gamma, this is the dealer exposure. It actually went up. We've seen gamma exposure just drop, and with it's gone the market, right? So today the gamma exposure shot up, and it shot up when the price got around this 414 level. So what this tells you is the dealers are holding a whole bunch of inventory right around 414, and it might be getting a little more on the bullish side just because the gamma hedge came up, but it didn't really end well. So we'll call that kind of iffy. We've got this bad. We got the options flow bad. Overall, I think we're pretty net bad. And then we get into the time cycle data, and oh my gosh, that is so ugly. So remember, the magenta line is the intermediate term, and it absolutely pulls the market down. If you were to look about this time frame here, May, I think that's second, you probably see the Dow fell really hard. This does not have anything to do with price. This just uses time cycles, very unique. Now it's pulling down the long term. So this could get considerably uglier. Now you would expect kind of a bounce, maybe a dead cat bounce. The market's just been tanking. And maybe today we had it a little bit and then we lost it. But then now the NASDAQ, this is the first time we've seen this thing curl down for quite some time. And the long end is staying flat. But if this, I believe this is going to free fall and it's going to take the white with us. And if you think about it, the NASDAQ has been really the strong star of the show. It can't remain that way. It's got to sell off and catch up with its friends. S&P, now it's really turning down. Now the long term is turning down. So I just see a lot of trouble here. Then we have the daily price cycle. Remember, this pink line is a culmination of all these lines down here. And each of these lines is another time frame. So this is like, call it the 50-day. Every 50 days, this thing peaks and troughs just like clockwork. And then you have the 40-day peaks and troughs. And these lines get smaller, the time frame gets smaller. You mix all this together and you get this pink line. And the pink line is always going to happen before the price. So what I want you to know is this was up here, way back here while the price was here. So the price does really follow this pink line, and you can see we're heading off a cliff on the S&P. And now the NASDAQ looks like it could run up a little bit more, but then the cliff. Okay, so trouble. Last but not least, and maybe up there in the top of my concerns is the big money. So the big money index, I've been showing you the SPY, but it really doesn't matter. You can see about May 1st, the big money started turning down. And when it turned down, it pulled the market with it. This happens every time. It's literally impossible for the market to climb when the biggest funds in the world are selling. Just like it's impossible to hold the market down when they're buying. And if you scroll down here, you really get an idea of the magnitude. So today there were 103 sells and 25 buys. Yesterday there were 59 sells and 35 buys. You can see the trend, guys. It's getting ugly. These guys, they're actually coming off the sidelines to sell. So long story short, I'm kind of bearish going into tomorrow. It doesn't really matter on our day trades because we're in and out fast and our signals are so good. All this matters for me picking longer term trades. And I'm very likely going to call out some puts on the Dow again tomorrow. Last week I called out some puts. We bought those at well, depending on what delta you bought, $4, and they went up to about $7.50 in just about a week. So that's it. If you have any questions, reach out. I'm always happy to help you, and appreciate you watching. See ya.